Right now, Datavault AI is trading at exactly $1.74, having climbed 13 cents to register a gain of 8.44% on the day. When you see a stock priced under $2, making a move of nearly 9% in a single session, the immediate assumption is often dismissed as mere noise or the typical volatility associated with microcap equity. The expectation most investors have when glancing at a chart like this is that we are looking at another speculative run-up, likely driven by retail excitement or a temporary surge in volume that will fade by the closing bell. However, the reality of what is happening with Datavault AI today suggests something far more structural is taking place beneath the surface of the order book. This isn't just a random fluctuation. This price action represents a collision between the massive appetite for artificial intelligence data solutions and the market's skepticism regarding small-cap execution. While the broader market might be fixated on the mega-cap tech names, the movement we are seeing here at $1.74 indicates that capital is beginning to rotate into the downstream beneficiaries of the data economy, companies that don't just process data, but actually assign monetary value to it. To truly understand the weight of this 8.44% move, you have to look beyond the headline percentage and examine the volume profile that is driving this price. Unlike a typical blue-chip move you might see in Apple stock, where a 1% gain is supported by billions in institutional capital, a move of this magnitude in a stock like Datavault implies a shift in sentiment among aggressive growth portfolios. We are seeing a pattern today that suggests accumulation, where buyers are stepping in every time the price dips slightly below that 170 level, creating a higher floor intraday. If you are watching this on your Robinhood app or tracking the order flow through a more complex setup, you will notice that the bid-ask spread has tightened significantly compared to previous sessions. This tightening is a classic signal that market makers are struggling to keep up with an influx of buy orders that aren't just coming from day traders, but potentially from sophisticated accounts looking for exposure to the data valuation narrative that Datavault is trying to own. It is easy to compare this to the early days of other speculative tech plays. When you look at the history of Tesla stock, there were years where the volatility made it uninvestable for the faint of heart, yet that volatility was the price of admission for future growth. Datavault is obviously nowhere near that scale, but the psychological mechanic is similar. Investors are currently wrestling with the question of whether this company is a legitimate player in the AI data space, or just another ticker symbol catching a bid because it has AI in the name. The intraday action today holding firmly above the $1.70 mark suggests that, at least for now, the bulls are in control and are betting on the legitimacy of the company's recent pivot toward valuing data as an asset class. This is a concept that sounds abstract until you realize that in an AI-driven world, clean, structured data is essentially the new oil, and companies that can refine that oil are going to command a premium. When we broaden our view to the wider market, it is interesting to see how this specific equity behaves relative to the sector leaders. Everyone watches NVIDIA stock as the bellwether for the entire industry, and rightfully so. But NVIDIA is the hardware story. The next phase of this market cycle, what we might call the software and utility phase, is searching for companies that can utilize that hardware to generate cash flow from intellectual property. Datavault fits into this narrative by attempting to securitize data. If you hold a standard Fidelity brokerage account, you have likely seen the research notes shifting focus from pure chip manufacturing to data infrastructure. This is where the opportunity and the danger lies with Datavault. The stock is moving today because the market is beginning to price in the possibility that their technology for valuing and tokenizing data assets might actually gain traction. If that thesis holds water, the current price of $1.74 is virtually meaningless as a valuation metric. It would be a massive discount. If the thesis fails, the liquidity we are seeing today could dry up instantly. For the individual investor, navigating this requires a different toolkit than what is used for passive income strategies. If you are using Schwab Intelligent Portfolios, for instance, your algorithm is likely screening out stocks with this level of volatility and low market capitalization. These automated systems are designed to protect capital from the very swings that active traders are exploiting right now in Datavault. However, for those engaging in self-investing, particularly those who are willing to do the homework on reading 10Q filings and understanding patent portfolios, this is the exact type of setup that offers asymmetric risk. You essentially have a company trading at option premium prices, but with equity ownership. The challenge is that unlike buying an index fund through Fidelity Investments, where the downside is cushioned by diversification, a single-name entry here exposes you to specific execution risk. The market is telling us today, with this 13-cent rise, that there are enough participants willing to take that risk. Let's talk about the mechanics of how people are actually trading this. In the world of online investment, access to these types of microcap stocks has never been easier, but execution remains tricky. If you are on a platform like SoFi Invest, you might find the interface clean and easy, but you need to be aware that market orders on a stock moving 8% in a day can lead to slippage. You might hit the buy button seeing 174, but get filled at 176 if you're not careful with limit orders. This is where the disparity between retail and professional trading widens. Sophisticated traders using Interactive Brokers trading platforms are likely watching the Level 2 data to see exactly where the resistance walls are built. Right now, it looks like there is a psychological supply zone approaching the $2 mark, which historically acts as a magnet for profit-taking. The fact that we are pushing up towards it on strong momentum is a bullish signal, but until we clear that hurdle, the stock remains in a speculative channel. The business model itself is what provides the reality to the expectation of volatility. Datavault isn't just selling software, they're building an ecosystem for data valuation. In a traditional economy, we value companies based on factories and inventory. In the digital economy, we value them based on data. Datavault's proposition is that they can audit, value, and monetize data sets using their proprietary technology. They recently made headlines with revenue growth numbers that looked staggering on a percentage basis, which is typical for smaller companies coming off a low base. But the market reaction today seems to be acknowledging that this growth might be sustainable. The company has been discussing the tokenization of real-world assets, the sector that is forecasted to grow into the trillions. By partnering with entities to tokenize assets like geothermal energy production, they are trying to bridge the gap between the crypto-adjacent world of tokenization and the tangible world of industrial assets. This brings up a fascinating point about how we categorize this stock. Is it a tech stock, a crypto play, a financial services company? In reality, it is a hybrid. If you look at the offerings within Fidelity mutual funds or Fidelity ETFs, you generally won't find Datavault in the top 10 holdings of a standard tech fund because it doesn't fit neatly into the global industry classification standard boxes yet. It's too small for the big passive flows, which means the price discovery we are seeing today is organic. It is driven by humans and specialized algos making specific decisions, not by the massive tide of passive indexing that lifts stocks like Apple stock or Microsoft. This organic price discovery is rare in 2025 and offers a clearer picture of actual sentiment. The sentiment today is decidedly optimistic, but it is a fragile optimism that requires constant validation from company management. One of the critical aspects to watch is the company's intellectual property portfolio. In the world of small-cap tech, patents are the only moat that matters. Datavault has spent considerable resources building a patent portfolio around data valuation. This is significant because if a larger player decides they need this technology, Datavault becomes an acquisition target. This potential for M&A activity often puts a floor under the stock price as investors calculate the liquidation value of the IP. It's a similar dynamic to what we see in biotech, where a company with no revenue but a great drug candidate can trade at a massive valuation. Here, the drug is the algorithm that tells you how much your data is worth. For a trader using a Robinhood account to speculate, this lottery ticket aspect is the main draw. You're not just buying the current cash flow, which is likely negative or negligible. You're buying the option value of their patent portfolio becoming the industry standard. However, we must address the risks, and this is where the reality can often bite the expectation. The primary risk for a company like Datavault is dilution. Small companies need cash to grow, and often the only way to get that cash is to sell more stock, which dilutes existing shareholders. If you are holding this in a Fidelity brokerage account, you need to keep a very close eye on their filings regarding shelf offerings or convertible notes. The 13-cent gain we're seeing today could be wiped out in 10 minutes if the company announces a capital raise at a discount to the market price. This is the eternal dance of the microcap investor, cheering for the price to go up so the company can raise money, but hoping they don't raise so much that it kills the momentum. It is a delicate balance, and today's trading volume suggests the market is not currently